So after talking about tax planning last week, with the end of the year coming up, I thought that it might be helpful for me to show you a prompt that you could use in ChatGPT to go ahead and help you do some tax planning. It's actually amazing what ChatGPT could do. And I put in there just as an example, adjusted gross income, capital gains income, family, two children, and asked it to spit out all of my tax information for the year. So this is a very good guide if you prepare your own tax returns. And then I also added in there for ChatGPT to give me 3 smart tax planning tips that it thinks that I could implement before the end of the year. So now I do get a little bit in the weeds on this one. So I hope that you're able to follow along. I tried to keep it high level, but I did go through the responses for ChatGPT in here. And I'm using this with financial planning, with tax planning. I did this for my own personal taxes to just try to get a good idea of what my tax situation is going to look like when I file my returns in April. It'll give you a good idea. Are you withholding enough money throughout the year? You might owe money, you might get money back depending on how much you had withheld. So tons of good information. And, I definitely encourage you to start using ChatGPT in your financial life, asking it for tips about budgeting, saving money, investing. It does come back with some great feedback on that. Now, obviously, you need to double check this stuff. You can't just take it for what it says. I found plenty of mistakes through going through financial planning scenarios with ChatGPT. So you just want to be careful. But it is getting better and better each and every day. And I do find it super, super helpful. So I hope that you enjoyed this one. All right. Let's get to it. All right, so now I'm going to show you a very quick example of how you could use ChatGPT to help you with income projections and just get any advice from ChatGPT, which I find myself relying on more and more each and every day. All right, so here we are in ChatGPT. Now, I do pay $20 a month for the pro version, and I find myself using this thing like all the time. So to me, it's very well worth it. But I'm going to show you the exact prompt that you could use, even in the free edition, to get some tax planning and some tax advice from ChatGPT. Again, make sure to consult with your tax advisor before taking action on any of this advice, but I do find it helpful. All right, so here's the exact prompt that I'm putting in here. Can you help me run the 2025 tax projection? Married, filing joint with 2 kids, W-2 income, $160,000. Now, this is basically just your salary, right? Your W-2 income. We also make $15,000 in net income from a small side business. So now might not apply to you, but let's say you do have a side hustle and you have some income that you make on the side and you would qualify for a QBI deduction for small business owners. So again, that's an example if you did have a side hustle, you're making some extra money. $10,000 of long-term capital gains this year. So that could be through the sale of stocks, equities, real estate, whatever the case may be. $10,000 of long-term capital gains. Contributed $20,000 to a 401k, $6,000 to an HSA. Going to take the standard deduction in 2025 and ask them to calculate these things for you. Your adjusted gross income, your QBI deduction on that self-employment income that you had, the side hustle, taxable income, which tax brackets apply, federal tax owed, and our effective tax rates. And then throw this in there as well. After that, can you list 3 smart tax planning moves we could make before December 31st to reduce our taxes in 2025? And then we just hit enter. So it actually thought for 3 minutes and 32 seconds to give me this response. And the response, it really is mind blowing. It breaks everything down. So first, they just go ahead and confirm all the numbers that they're using: 160 W-2, the side business, 15 grand, $10,000 long-term capital gains, the contributions. They show you the tax brackets and how they will apply to you. So now let's go down to adjusted gross income. So 160,000 in wages, 15,000 the side hustle, the long-term capital gains. So total income, $185,000. And now the above the line deductions, they come right off the top. The 401k contributions into the traditional 401k, that was 20,000. The HSA, 6,000. So total adjustments, 26,000. So that brings our adjusted gross income down to $159,000. And then we have the QBI deduction, right? The self-employment, the qualified business income deduction. And that is 20% of the qualified business income. So it was 15,000, 20% of that is 3,000. So that will be the deduction on that income. So now we subtract that off. Right now, we also have the standard deduction. So that's $31,500 for 2025. So they show exactly right here. So now we have $127,500 is what the taxable income is. Then we tack on that $3,000 of QBI deduction, and we get to the final number of taxable income of 124,500. And now they go ahead and they split out the $10,000 long-term capital gains, because that has its own separate capital gains tax bracket. So you can see the breakdown right here. And now they actually show you which tax brackets apply, and they give you the breakdown of how it's taxed, which is super helpful. So for the 10% bracket, right, up to that $23,850, 10%, that's how much tax you would owe on that amount. Then we have the 12% tax bracket, they break it down, the 22% tax bracket, and they break that down as well. And then you add them all up from each tax bracket, and this shows you what the amount of tax that you would owe would be. But there's more. We're not done yet, right? So, but they show you that you're in the 10, the 12, and the 22% ordinary tax brackets with your top marginal rate at 22%. And now this $10,000, because your income is over that capital gains tax bracket, that 0% capital gains tax bracket, they show you that you are going to be subject to the 15% long-term capital gains tax bracket. So 15% of the $10,000, so $1,500 is going to be the tax on the long-term capital gains. So now you add up your ordinary tax from the tax brackets, the long-term capital gains tax, and you get to this $16,518 in federal income tax. But this says before credits, right? You're going to have some credits that will reduce that amount. But they show you your effective tax rate. All right, so the 16,518 divided by the $159,000 of adjusted gross income, that gives you a 10.4% effective tax rate. So now we need to do the credits. So because you have two children, and we didn't specify the ages, but we're going to assume that they are under the age of 17, and you get the $2,200 per child for a tax credit. Now, tax credits are super powerful because they reduce dollar for dollar your tax liability. So in this case, the tax liability that you had was the $16,518, but now we could subtract $2,200 for each kid, so $4,400, and that gives you a tax of $12,118 now. And then they go ahead and they show you the effective tax rate again, which has now gone down to 7.6%. So amazing how it could do all that calculations. Now it did think for 3 minutes, right? So I did have to sit and wait for 3 minutes for it to throw this out at me, but it is pretty amazing. And then they give me the 3 smart tax planning moves. But even before I get to that, right, you could see the 12,118, that is the tax after the child tax credit. So then you could go and you could look at your W-2, you could look at your pay stubs and see how much money have we withheld throughout the year to get a good idea. Am I going to owe money at the end, or am I going to get money back? If you withheld $20,000 throughout the year for federal income tax, then there's a good chance you're going to get a chunk of money back come April, right? If you only withheld $6,000 from your paychecks throughout the year, then you're going to owe some money when tax time comes. But this is just a great way to do a projection. And then the 3 smart planning moves, I'm not going to go through these, but they basically are what I went over already. Increase your 401k contributions, and it shows your marginal rate of 22%. So for every dollar that you put into your 401k, you're saving 22 cents in federal income taxes, right? Then max out the HSA as well. And then the last one is to do some tax loss harvesting if it's available, because you had $10,000 of long-term capital gains. So we will leave it here as far as analyzing this, but definitely do this for yourself because it is super helpful. All right, everyone, that is it for this video. I hope that you found it helpful. Please hit that like button if you enjoyed it. Subscribe to the channel if you're not subscribed already. Check out schoolofpersonalfinance.com. You can see all the different ways you could work with me, and I will see you again in the next video. Thanks.